Well, let's take a quick look at the business news now. Chief Analyst with GTC, Jamil Ahmed, is with us for that. The Federal Reserve expected to make its first interest rate cut in more than 4 years, Jamil. That interest rate decision, I imagine, on a lot of minds. How's the global markets looking as we get ready for that?
It's on everybody's minds, and in fact, there's quite a quiet market environment to the point where you could hear a pin drop because the anticipation is very high and very wide globally, because we've been waiting for this day now for close to 1 year. It was in October 2023 that the US Central Bank finally gave the signal that it was looking to cut interest rates in 2024. And since then, we've pushed back expectations from June all the way till July. Now in September, today, we are finally expecting the US Central Bank to cut US interest rates. And the question to ask is, how big were the interest rate cuts? Because there are concerns that the US Central Bank has moved late when you consider that some of its peers, like the European Central Bank, the Bank of England and so forth, have already cut interest rates. And then there's others that think that actually US data has been very resilient and robust for the past 18 months or so, up until recently, that the Fed hasn't needed to cut interest rates at all. And we also have to consider that inflation is now trending towards a 2% target. That's provided more confidence that the Fed will cut rates today. But the question to ask is, how big will the interest rate cut be?
Well, Jamil, whether the interest rate cut is 1/4 percentage point, 1/2 percentage point, it looks like there's a lot of tension in the markets over that. Why the tension?
It's a coin flip. More recently, we've seen US economic data slow down, and they say that there's no fire without smoke. I'm not going to say that the fire is really burning the US economy. I would say it's more like maybe a paracetamol I need for a headache or so forth. But generally speaking, we've had 2 substandard US monthly jobs reports. Some of the ISM and the PMI data signals the US economy is suffering from global weakness. And as such, there's concerns that the Fed has left it too late. So to provide some reassurance to investors, or maybe an insurance that US economy is slowing down the second half of this year, many do want the Fed to cut by 0.5% today. At the same time, we have to consider the longer term perspective. US economy has done very well. It's been very robust for the past 18 months or so. 2023 was fantastic for the US economy. It was printed emerging market growth figures, and that provides more impetus and suggestions that actually a 0.25% cut would be beneficial and would be leading by the status quo. And if the Fed actually did move larger than expected today, say 0.5%, that could also provide some tension and unease that the Fed is accepting that maybe it has left it too late.
Jamil, it sounds a little bit that the tone of what the Fed says today is almost as important as the percentage cut. Is there something else we should be looking out for when that announcement is made?
This is going to be one of those meetings where we already know the conclusion. We just don't know how much the interest rate cut will be. So the devil is very much going to be in the detail. And I would say we have to look for how much control the US Central Bank has over longer term interest rate policy, or if the Fed show concern. If the Fed show concern, then we can start to print in even more expectations of further interest rate cuts, not just for the rest of this year, but into 2025. I would just say that if they do show concern, then it's going to really provide some alarm bells that the Fed has left it too late. And considering that the Fed leads the global central bank narrative, it is the central bank belonging to the largest financial institutions and the world reserve currency, that if the Fed do signal that it's moved too late, I think it will cause more concerns for global markets, because global markets have been at all-time highs and hitting new record highs simply based on these expectations of lower interest rates globally.
Okay, interesting day ahead, it sounds. Jamil Ahmed, Chief Analyst at GTC, thanks indeed for your time.